Howdy, everybody. Welcome to Liberty Call. Today is Monday, July 15th, 2024. Hope you're having a fantastical day out there in the interwebs. It's kind of gloomy here in Colorado. Got some overcast skies, which is kind of nice, keeping the sun away. It was quite warm over the weekend, and I somehow survived and did not die of a heat stroke. So, excellent news. All righty. Well, it looks like the markets were in a better mood today, especially after some of the weird things that happened over the weekend. I'll keep that to the political people. That's not really my wheelhouse. Well, not for here. So anyways, well, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. All righty, let's go ahead and get into today's numbers and see how things turned out. Dow Jones was up 0.53%, 210 points, closed at 4211. S&P 500 up a third, 18 points, closed at 5633. Nasdaq up 0.42%, 77 points, closed at 18,475. The VIX was up 5.46% today. It's at 1314. Canada was up 0.34%, Brazil up 0.38%, and Mexico down 1.11%. In Europe, a lot of red. Germany was down 0.79%, the UK down 0.85%, France down 1.19%, Netherlands down 0.79%, Spain down 0.96%, Italy down 0.59%, Switzerland down 0.58%, and Portugal down 1.55%. Russian exchanges both red today. The MOEX down 2.07%, RTSI down 2.15%. And the Asian markets, the Nikkei in Japan, when it closed on the 12th, was down 2.45%. Australia up 0.73%. New Zealand up 0.09%. In China, the Shanghai also up 0.09%. The Shenzhen component down 0.59%. China A50 up 0.36%. DJ Shanghai down a tenth. Hang Seng down 1.52%. And the Taiwan weighted down 0.16% for the day. All right, so that is everything there. Let's hop into our weekly economic update and see what the news is there. Stocks advanced last week as market leadership shifted amid fresh inflation data and quarterly corporate reports starting to roll in. The S&P 500 advanced 0.87%. The Dow picked up 1.59%. NASDAQ rose 0.25%, and internationals rallied 1.62% through Thursday's close. The Dow breaks 40,000 again. Megacap tech led modest gains for the S&P 500 and Nasdaq in the first 2 days of the week, with the Dow posting modest losses both days. But that narrow trading range did not last long as market leadership shifted midweek. Upbeat corporate earnings reports and milder than expected consumer inflation in June drove momentum in a handful of larger industrial and consumer stocks. Q2 earnings season got into full swing later in the week, dominated mostly by financial and consumer-oriented companies. Markets seemed initially unfazed by the better than expected reports from some money center banks. Some observers suggested higher interest rates may be one of the reasons for the market's lukewarm response. The Dow ended the week with a solid gain after 3 consecutive weeks of trailing the S&P 500 and NASDAQ. The Dow also closed above 40,000 for the first time it had done so since May and hit a 52-week intraday high on Friday. All right. Mixed inflation news. 2 inflation reports came out last week, the PPI and the CPI. The Producer Price Index, which measures the change in wholesale prices, rose 2.6% in June, year over year, its largest increase in 16 months. By contrast, the Consumer Price Index, which tracks consumer prices, showed that the pace of inflation slowed in June. Markets shrugged off the conflicting data, instead embracing the cooler CPI data. The Fed is likely taking notes for its next Fed meeting scheduled for July 30th and 31st. Economic data coming out this week. On Monday, we have Fed Chair Jerome Powell and Fed official Mary Daly speaking. Tuesday, retail sales, import and export prices, business inventories, and the housing market index, and Fed official Adriana Kugler speaks. Wednesday, we have housing starts and permits, industrial production, and then Fed official Thomas Barkin speaks. Thursday is jobless claims. Fed officials Michelle Bowman, Mary Daly, and Lori Logan speak, and the Fed balance sheet. And Friday, Fed officials John Williams and Raphael Bostic are speaking. Companies reporting earnings this week. Monday is Goldman Sachs and BlackRock. Tuesday, United Health Group, Bank of America, Morgan Stanley, and Charles Schwab. Wednesday, Johnson & Johnson, Elevance Health, and Prologis. Thursday is Netflix, Abbott Labs, Marsh & McLennan, Blackstone Group, and Infosys. And Friday is American Express. All right, so that is the weekly update. Let's dive into today's market recap. Dow rises to new all-time high as Powell gives nod to recent inflation progress. Well, as long as Powell is happy, that's all that really matters, right, folks? The Dow surged to a fresh record on Monday as increased expectations for a September rate cut were bolstered by Federal Reserve Chairman Jerome Powell's comments on inflation data. Powell indicated that recent inflation readings had strengthened the Fed's confidence in controlling inflation. Okay, if you say so, suggesting that rate cuts might be imminent. He emphasized that the Fed might not wait until inflation hits its 2% target before cutting rates, highlighting recent positive inflation data as a contributing factor to this confidence. Well, and a few weeks ago, we also talked about how the Fed wanted to increase their target up to like 4%, so that hey, magic, we're within our goal again. Man, we just we did such a good job. We just had to move the goalpost closer so we could kick that field goal. Former President Donald Trump survived an assassination attempt during a campaign rally in Butler, Pennsylvania. The assailant shot at Trump multiple times, grazing his ear. Early reactions to the attack suggest that Trump's chances of winning the 2024 presidential race might have improved, potentially resulting in a more hawkish trade policy and looser regulations on issues like climate change and cryptocurrency. Trump is expected to speak at the 2024 Republican convention in Milwaukee, where he's likely to be officially nominated as the party's frontrunner. And I think that's going on right now. I think he's, well, if what's on the TV is correct, he has already been nominated. And also a little later in the article, we'll talk about his VP pick. Following the attack, Trump Media and Technology Group Corp surged 33% in recent trades. Analysts at Stifel noted that the odds of Trump's victory in November have shifted in his favor, with some increasing their bets on the House shifting to the GOP. Goldman Sachs reported a more than doubling of profit in the second quarter, driven by higher fees from debt underwriting and strong fixed income trading performance. BlackRock's asset management reached a record $10.65 trillion, leading to a 0.3% increase in its shares. Bank of America and Morgan Stanley are set to report on Tuesday, while ASML and Netflix will report later in the week. Apple rose 2% after Loop Central upgraded its rating to buy, citing the company's advancements in artificial intelligence and its growing presence in India, which boosted its annual revenue in the country by 33% to $8 billion. Conversely, Macy's fell 12% after ending acquisition negotiations with Arkhouse and Brigade. Finally, former President Trump is expected to announce his choice for VP, with Ohio's Republican Senator James David Vance, they call him JD, likely to be selected. And actually, there was an article earlier, about an hour or so ago, that he did select JD Vance as his VP running mate. So I have no opinion either way. He doesn't seem terrible on the surface, but I also don't follow him that closely. All right. Well, that is everything there for the weekly, or for the market recap for today. So good stuff. Good stuff. All right. Let's get to an article from Zero Hedge. What rate cuts can and cannot do, with all the talk about, when's the Fed going to lower rates? Oh my God, all the hand wringing. I'm paying 5% on a loan. Oh, it's ridiculous. So this was authored by Jeffrey Tucker of Epoch Times. So let's dive into the summary of this. All right. In a recent article, Jeffrey Tucker analyzes the recent economic data, specifically focusing on the Consumer Price Index and the Producer Price Index. The CPI showed a year-over-year increase of 3%, which is now seen as acceptable. I'm not sure by who, though it would have been considered high 5 years ago. A month-over-month decline of 0.1% in June, largely driven by drops in gas and used car prices, was hailed as good news, but Tucker cautions that this is a minor blip influenced by exclusions and adjustments that can easily be reversed. The Producer Price Index, which receives less attention, indicates reaccelerating inflation, with year-over-year changes worsening. The divergence suggests underlying inflationary pressures remain significant. The report reinforces the Federal Reserve's intention to cut interest rates in the fall, a move that has been anticipated and driven and has driven higher financial market performance. Tucker warns that while rate cuts might be welcomed by those looking to buy homes, it may not affect longer-term bond rates or credit card debt, which remain high. The yield curve, which helps allocate credit, might steepen, keeping longer-term rates elevated. Household income is being squeezed, leading to rising credit card debt and falling savings rates, a situation exacerbated by high spending during the pandemic and subsequent inflation. Over 5 years, the CPI shows a 23% reduction in the dollar's purchasing power, though real-world examples like fast food and housing indicate much higher inflation rates. For instance, McDonald's prices have risen significantly more than CPI suggests. Housing costs are up 41 to 49%, and health insurance premiums up 20% also outpace official inflation metrics. Tucker criticizes the Bureau of Labor Statistics inflation measurement methods, noting discrepancies between government-reported figures and industry data. He warns that cutting rates now would repeat the mistakes of the 1970s, leading to another round of inflation. Despite the weak job market and stagnant output, financial markets are buoyed by speculation, particularly around artificial intelligence. The article concludes that explosive government spending since the pandemic has created significant economic challenges. The real crisis may be ongoing stagnation combined with persistent inflation, potentially exacerbated by another rate cut. This situation, Tucker suggests, could lead to a prolonged period of economic decline. Well, I would say that the United States is already in that decline, and we're headed towards I would expect that the hegemony that the U.S. government's had the last almost 100 years is coming to an end. And does the U.S. need to be in charge of policing the world? No, not really. So I'm kind of welcoming it at this point. All right, one last article from First Trust, Mr. Brian Westbury, the chief economist. This week's article is titled M2 Slowdown Finally Gaining Traction. All right. The recent economic data suggests that the effects of the Federal Reserve's monetary policy during the pandemic are finally manifesting. The M2 money supply, which surged in 2020 and 21 due to massive government deficit spending and temporary tax cuts, is now down from its peak. This reduction in the money supply is having an impact on the economy. During the pandemic, the M2 measure increased significantly as the government sought to mitigate the economic impact through increased spending and tax cuts. This spike in the money supply led to inflationary pressures in 21 and 22, a development that should have been not have been surprising. However, many attributed inflation to other factors like supply chain disruptions, geopolitical issues, dismissing the role of the increased money supply. Despite this, inflation persisted. The consumer price index is currently up 3% year over year, indicating that the inflationary pressures were not merely transitory. Right, Janet Yellen? The Federal Reserve has largely ignored the money supply, with Fed Chair Jerome Powell downplaying its importance. However, the relationship between money supply and inflation is gaining recognition. A recent paper by economist Greg Mankiw highlighted that forecasts considering the M2 surge in 2021 accurately predicted high inflation. The First Trust economics team, recognized for their accurate economic forecasts in 22, also emphasized the significance of the M2 surge. Currently, consumer prices saw a 0.1% decline in June, the largest monthly drop since early COVID-19 days. This was partly due to lower energy prices, with core consumer prices also rising modestly at 0.1%. Economic growth appears soft, with retail sales stagnant since December and manufacturing production likely down year over year. The M2 money supply peaked at about 2 years ago, and its subsequent decline through late 2023 is now affecting the economy. M2 has been growing at a modest 2.3% annual rate since last October, which could facilitate a soft economic landing and continued inflation reduction, possibly allowing for Fed rate cuts. Conversely, a further decline in M2 could heighten recession risks, while a surge could revive a 1970s style inflation. Overall, the focus on M2 money supply is increasing, and it remains a critical indicator for investors to monitor closely. All right. Well, that is all the news that is fit to be told for today. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. So if you need something from me, you need to get your financial crap together, give me a buzz. I'd be happy to help. All right. Well, that's everything that I had for today. Hope everyone has a wonderful evening, and I shall talk to all y'all again next time. Adios.